Hi, everybody. Hi, Mike.
Hi, how are you?
I'm doing all right. You?
Good.
Good. Let's go right into it, shall we? Okay, you guys are a lending company, a financing company. I think I read that you guys are on track to loan something like 16 billion this year. That's the aim, right?
16 billion, that's right.
Okay, that's pretty cool. Right, so
billions.
you've got, but there's like many other places where people can take loans. Some of them are like traditional banks, some are other startups. Some of those startups have gotten hammered over the last year or two for what they're doing. So what are you guys doing that's right, and why should people be going to you guys?
So I think one of the biggest things that we do is we put an emphasis on the consumer in a particular way that we're focused around speed, transparency, and alignment. And the way that manifests is we build products that people want. So for example, we created student loan refinancing. It didn't exist before we did it. We launched that product in the market. To date, we've saved people over $1.5 billion of interest on that product by refinancing. We deliver it through mobile. So to us, the mobile is a ubiquitous branch. It's how you interact 24/7. It's what's replacing the old physical brick and mortar. We run the highest service levels in the industry. So we run net promoter scores between 70 and 90 across the product set. But most importantly, we build a true community, so a concept of alignment. So when you become a SoFi member, you're actually a member. We launched Raise Week this week to help people get paid more. We have networking events 2 to 3 times across a week across the US. They're always oversubscribed. We have dating events. We have entrepreneur programs to help people start companies. And I think that combination of things has really differentiated us and allowed us to build a strong competitive advantage in the market.
Okay, thanks. We're going to get into some of those other programs that you're doing in a little bit, I think. Now, SoFi was sort of focused first as social finance, and you were started out of Stanford, right?
That's
you want to give us a little bit of the backstory? You're focused on students, right?
Sure. So when we were at Stanford, one of the things that was very striking is what was conveyed to us is no one in the graduate school of business had defaulted in 35 years on a loan, but they were paying 6.8 and 7.9% loan rates. And to us, it didn't seem that the rate was commensurate with the risk. And so there was a very clear opportunity to go in and deliver a better value proposition to folks.
Right. So started out focused very much on students. I mean, I know that you once said to me something like, we go from 18 to 85 as your customer base, but you're largely around like the millennials and the younger people, right?
Yeah, our concept is that it's really 25 to 45-year-old, and most everyone here has heard the acronym HENRY, the higher earner not rich yet, but the premise is that if you're 35, you're probably pretty unhappy with what you get from your bank, from your broker, from your insurance provider, and we think there's an enormous opportunity to close that gap.
Right. I mean, the student debt issue is a massive one. I was like looking up some stats before today, and you've got, I think this year they're projecting 44 million students, 1.3 trillion in debt, and that's just the US. It's like a huge problem. It's kind of funny though, I was sort of thinking about it. Do you see that as like a crisis or an opportunity? Everybody talks about it as a crisis. It's like the country's going to collapse under this debt. So what about you guys?
I think it's unfortunate, and this might sound ironic being someone who refinances student loans, but I wish there was a lot less student loan debt out there.
Yeah.
And really the key is, one of the shortcomings we have in the lending system is, when you go to a school and you borrow money, no one sits down and explains to you what you can borrow, what you're going to get paid, your ability to pay that loan back. It's a perception of free money, and it's not that. And it's, basic financial literacy is something everyone should have. It's empowering. It's a tremendous thing, and it's something the university system fails in when they give money out.
Yeah. Do you think that you might try to leverage that at some point though, and like try to work closer at the university level, since you're already doing so much in education, as it were, post the loans that people take out? There's an opportunity there to like work with universities to help the financing from the get-go? Yeah,
I think one of the challenges is there's a little bit of an agency problem, because the way the student loan system works today is the school has the student borrow the money. If the student doesn't pay back, there's no clawback to the school, there's no accountability. And so they're not necessarily incented to provide that financial literacy up front, and so you kind of have to go roundabout. So at one point we ran a campaign called Know Before You Owe, where we showed what the likely salary was that you were going to have, the amount of debt that you could take down, and the financial aid offices did not like it at all.
Oh.
And so, I think there's an enormous opportunity to do more here, and as SoFi becomes bigger, as it becomes a more profitable entity, we'll do more on the nonprofit side and the 501c side, and there's some tremendous opportunity to bring financial literacy and empowerment into students.
Yeah, so this is actually leads very well to my next question, which is that I know that part of your success has been because you've been really good at setting algorithms to kind of fit the best borrowers. We're talking about good earners, good universities, taking like good jobs that are going to earn a lot of money. But I was, speaking to someone I know who tried to refinance their substantial graduate student loans through SoFi, and the repayments turned out even higher than what they were already paying because it was a liberal arts graduate degree. The person is like, struggling writer,
Right.
Sort of doesn't fit the profile.
So,
what's your response to that? Are you guys ever going to do, a special algorithm tweaked to like school teachers?
So one of the things that we try to do is we try to move away from traditional underwriting, and when I say that, I mean most banks use FICO scores and debt to income as a way to assess viability of credit. And with SoFi, what we really care about first and foremost is just that you have free cash flow, so that you make more money than you spend. And the way that we do that is we look at your income, your taxes, the bills that you have, where you live, and we make an assessment about how much cash flow that you have, and the more cash flow, the lower the rates are. And I think the key is that while we started at Stanford and we expanded out to 5 MBA programs, 20 MBA programs, today we're across all Title III schools. And so it doesn't matter if you went to Wayne State or you went to Stanford, it's the same process. And so what we've been able to do is, as we've made more headway in the market, as we've made more headway with the capital markets, we've been able to both lower our cost of financing, but dramatically increase the number of people that we can impact. And that will continue. And so over time, we'll be able to have an even greater impact than we have today. But as I said earlier, today we saved $1.5 billion in interest in student loan refinancing.
Yeah, but I mean, do you have like any plans, or do you think it's like financially possible for you guys to start coming up with new kinds of demographic profiles that you can cater to? So, for example, people who choose to go into, public education, or one of these other areas that's very, very socially worthy, but is never going to earn money, costs just as much to get through school to be able to do that.
So there's three points to that question. First, if they go to public education, they should keep their federal loans because they can get expunged. And we would tell them that along the way, make sure they didn't make that mistake. I think second, the issue is, why are they going into that? Why are they coming out with that much debt to begin with? And that goes back to the financial literacy comment I made earlier, right? There's ways we can address this at the beginning of the process. And the third is, I see an opportunity for us over time to have that nonprofit function provide debt relief to folks that are pursuing opportunities. So, an analogous to this is today for entrepreneurs, if you want to start a company, we put your loan in forbearance. We help you raise capital, we help you pull your business plan together. And because we want you to be successful, we're aligned to you. So I don't see that it's out of the question that we do things like that for other professions over time.
Would you sort of team up with organizations to do that, do you think? Have you talked to them or anything?
Yeah, so we started to have conversations with some mission-driven organizations, and in particular, one of the challenges in the US is around foreign students and lack of credit to foreign students. And so I think there's a lot of opportunity within some of the mission-driven organizations to provide innovative solutions into that market segment that are commercial, that make sense, but are dramatically lower in rates than the option they have today.
Yeah, I mean, is that something you might launch quite soon? Because the foreign lenders is a huge one, because like my daughter and son might end up coming, I live in London now, but when they come here for university, which is a very strong possibility.
So one of the first things that we're going to do is we're going to start doing student loan refinancing for H-1Bs.
Yep.
And that's a market that's in desperate need. And I think out of that, we'll start working on what we can do in terms of foreign national studying.
For other kinds, fantastic. So another anecdote. I was speaking with another person who told me that when she did her mortgage, I went SoFi first. And I was like, oh yeah, why? And she said, it means I didn't have to talk to anybody. I don't want to deal with anyone.
It's true.
Yeah.
You don't have to.
Yeah. So, and yet you guys are actually kind of going, like in terms of the way you're growing, I would say that you're adding more things to create more human contact you're like I think just today you're doing the wealth management thing, and you've got your little party, your wine and cheese nights, and and all of that. So what's going on there? What are you going for? And does that meet another need you guys are seeing?
So I think you should have the option not to talk to anyone.
Yeah.
But the reality is,
I hate talking to people myself.
I think when we first built our mortgage application, I went and I applied for a mortgage from everyone out there. I absolutely destroyed my FICO score in doing it. But what irritated me about it was I'd go online and it would say, just give me a little more information, a little more information, a little more information, and then at some point it would say, you're almost done. Like, do the last piece of information, and it stops, and someone called me. Right? Universally, that's how it worked. And I didn't want to talk to anybody.
Yeah.
And so, I think you should have the ability to go online all the way through the process, but the reality is people also want interaction, right? We get 4,000 inbound calls a day into our call center from people that want to talk to us. Certainly with wealth, I think, one of the most striking things we heard from our members is, yeah, they like the low cost basis, and in fact the free basis of a robo-advisory function, but sometimes they have questions, they want to talk to somebody, and we want to have licensed people there to respond to them. The networking events and so forth that we do, about 10% of SoFi members have gone to offline events, whether that's the networking or how to buy a home or the dating. It's been massively popular for us, and the reality is people want to interact, and we want to give them the ability to do that. Okay,
well, so there's what's the end point of that? Like, at what point do you say we've kind of diverged too far away from our core, what we're supposed to be doing? Like, maybe we shouldn't be, doing dating apps.
Right, so.
How does a dating app come out of a finance company? Like, how did that happen?
Because we don't think of ourselves as a finance company, right? We think of ourselves as money, career, and relationships. And we see those are the three things that resonate into our member base.
Okay.
And we want to be there to help them be successful across all three, right? We want to give them financial literacy and empowerment, and great financial options on the money side. We want to help them with their career, we want to make them be successful, we want to help them get their raises and negotiate their salaries. But we want them also to have a rich personal life, right? In terms of both friendships, networking, mentorship, and also relationships. And to us, I think this model is what financial services will look like in another 10 to 15 years. Right now, we're getting tremendous success with it. The banking industry is very resistant to it, but we will drag them into the next generation over the next 15 years.
Yeah, one way you're going to do it is you're getting a banking license.
Well,
so
not
you're putting on the man's clothes.
So
what's all that about?
I think one of the biggest challenges that we have is we want to be able to deliver our members a deposit account. And we want to have a place to debit and credit from. We want to give them a credit card as well. We don't have that today, and that's really important. And the only way you can really structurally get that today is with a banking license, except I think we found some ways around that. And so I'm not certain we're going to be a bank. We certainly have the ability to apply for the banking license, and we probably will. It's a special kind of license called an industrial loan bank, which means that SoFi itself isn't a bank. And we can continue to do the dating and networking and all the cool stuff that we do over there. But we might have found a way to get around this where we can deliver the service and product to our members, make it economical, and not have to go through the banking process.
Is it going to be like a white label thing maybe with another organization? Because I know that there are companies that offer those.
And I've never been a huge fan of that because I think it can only be as good as the underlying infrastructure, right? I always call that lipstick on a pig. And so what we're doing would be completely SoFi. But we'd be able to control the member experience, we'd be able to control the product, the structure, the delivery. Just keep your eye out for it this year and see what we do with it.
Okay, do you think that when you would do that, that's very interesting. So you're probably going to do banking, but not as a traditional bank. Do you think it'll be like a simple style online only, or do you think you would try to do something with brick and mortar too?
No, I think we are 100% online. So I think
maybe you can help with questions at Wine and Cheese Hour.
Yeah, so I'll caveat that the state of Nevada requires us to have a branch to have a lending license there. So we have 50 lending licenses, and that's so I actually have a small branch in Nevada with one person, and I've never met them. I don't know what they do, but sure, it's an enriching job.
That's interesting. Okay. So I'm just going to ask you about something else. I don't want to peek.
I'm not peeking. I can't read.
Not that you can read my writing, but okay. I'm going to quote you. We're willing to take risks, and we're willing to be wrong. Our thesis is you should always have a level of discomfort. Do you
Yeah.
remember saying that?
Yeah.
Yeah. Now, I think it was used in an article which asked the question or posed the idea, you were the Donald Trump of fintech.
Yes, someone once said that.
Accurate? What's your response to that? Are you the Donald Trump of fintech?
Well, I certainly don't think that's true.
Wrong.
but I do think that you have to have a level of uncomfort.
Yeah.
And if you don't, you're not going fast enough and you're not taking enough risk. I think that...
Are you talking about your customers or yourself as a business?
Yourself as a business.
Okay.
Right? And so, you know, we operate in financial services, and financial services is probably one of the grayest areas to operate in terms of there are lots of situations that aren't clear cut. And our thesis has always been, if what you're doing is if it works for the consumer, if it's right for the consumer, it's good.
Yeah.
And so when we found situations of uncertainty, we've just opted to benefit the consumer. And you know, I think that's the right approach. And you always have to have a little element of uncomfortableness because you know, if you're not pushing it hard enough.
Yeah, I mean, you guys sort of do some of the refinancing of your in the back end. You have a hedge fund, right?
So we have a couple of different investment vehicles that folks can participate in. It's not truly refinancing, but they participate in parts of the securitizations that we do.
Right. Do you have plans to do more on that front then?
Our biggest challenge there is we do not have enough supply for the investor demand. So
Okay.
We will try to do more, but we're supply constrained right now.
Does that mean that there may be funding that you're raising to do that? You guys have raised, just to be clear, you guys have raised 1.9 billion.
That's right.
You're valued now, what, at 4.3 billion?
I don't publicly comment, but you're close.
Okay, 4.4. No, I'm just kidding. Yeah, but anyway, you raising more money then, or what?
No, we have plenty of capital. So SoFi's profitable. We have $1.9 billion of equity. We have almost $5 billion of warehousing on top of that. We've been profitable for a while, and right now, no intention to raise any capital.
Okay. I want to ask you about Nino.
Okay.
Nino Fanlo. Okay, so a little backstory. The president of SoFi, who's been with the company for quite a while, big part of your growth and your strategy, ex-KKR guy, has left the company to go to a healthcare startup, I think,
Yep.
right? Why did he leave?
So I think, you know, my history with Nino has been great. I worked for him at Wells Fargo for 5 years. He worked with me at SoFi for 5 years. I think SoFi was a lot more enriching for both of us than Wells Fargo in terms of experience and time together. And he'd done a phenomenal job building our capital markets business, you know, leader in the space and one of the largest asset-backed issuers out there. And you know, at the end of the day, he wants to go help cure cancer. So he's going to a genome project with a phenomenal chairman that's doing some really interesting, innovative stuff. And I can't fault him for having the ambition. So he's left the company in phenomenal shape.
Yeah. How is it going, the sort of replacement for him? And subsequently, where are you hiring right now as a startup?
Yeah, so Steve Freiberg, who was the CEO of E-Trade and head of consumer at Citi, stepped in the short run for Nino in the finance side.
And he's on your board, right?
That's right, he's on the board. And we're going to do a regular search and go through the process, and it gives us an opportunity to get a world-class CFO and to help the company get to the next stage, which is as a public company. But we're hiring pretty much across the board. I mean, I think we just reached 1,000 people, and are continuing to grow at a really good clip. So, you know, there's no shortage of opportunity at what we're doing.
It's interesting because I was covering another company, like very different sort of company to you guys, but in Europe called Creditech. You probably know them.
Sure.
Yeah. And their big thing is they're hiring, right? They just raised a large amount of money and they're looking right now to hire. It's all about data science for them at this moment. You know, is that something big for you guys too, or do you feel like you've got that part down now and now it's just about sales, business expansions?
Yeah, I think you can never overinvest on the data side. I think it cuts across top of funnel acquisition, funnel conversion and marketing, underwriting, risk management. There's just so much to do there. And really the financial services industry has been relatively slow to adopt what we would call big data. In a way that's beneficial to the customer.
Yeah.
And so I think there's an enormous opportunity there. We're always hiring in that.
Okay, I just have 30 seconds here. I want to ask you about, you hinted at IPO as the next step. What does the market look like for you guys now? I mean, it hasn't been that good for loan companies. public
Yeah,
markets.
but-
Lending Club has been hammered.
But it's really good for banks, and so I think we're not in a rush to do it. As I said,
Yeah.
we're a profitable business. We got a lot of equity capital, and it's really when the time's right, it'll happen.
Okay. In a year?
I don't know.
2 years?
I always get in trouble for giving timelines, so I'm just going to say I don't know.
Oh, I wouldn't get you in trouble. Anyway, we're out of time, but thank you so much.
All right.
Appreciate it. Thanks, everybody.
Thank you.
Yeah.